Hello, ladies and gentlemen. It's nice to be here sitting in front of a markets audience after many, many years in Mumbai. I don't know when was the last time I did something like this, and I almost seem to forget that I did this for a living for so many years. In fact, this morning I was speaking to our speaker, Samir Arora, over breakfast, and he said, my God, this boy, when I first met him, he was talking about me, he was a real bacha. He was a baby, he said. So I think, he must have been in my early 20s, but yeah, it was a long time ago. And Samir's been around much longer than I have, and we are old friends, and it's great to have a conversation with him today. Samir, it's great to see you.
Thank you very much, and good welcome you back to Bombay.
Thank you.
Mumbai.
Well, since you're here, I'm wondering whether you'll tell the audience to begin with that this will be a better year than last year for the stock market. Will it?
For sure, it will be better. And actually, I tweeted on it recently that the rabbit will help you more than the tiger did. And it is very simple, because if you look at the big picture issues affecting the world last year, one was the US market and the US interest rates, and one was maybe China and its policies and everything else that they might have done wrong. Both have gone past their negativity in some sense, and I think both the markets will be flat to up. China is actually already up a lot. And therefore, two external influences which were negative last year, which I think hurt India, are not there. So then we have to create our own negatives, and hopefully we will not create that in this budget by having some capital gains or something. So it should be okay.
You think it's coming? Because this time the noise is louder than last time.
No, actually I don't think it is louder. I think the strategy is that if you don't have it, then we will all call it a good budget.
That's true. Yeah, they fly a kite before the budget. Yeah. But you don't think that 1 to can become 3 years?
It is such a waste of an opportunity to do that when, first of all, nowhere in the world do foreign investors pay tax anywhere. Like if an Indian was to buy stocks in US, there is no tax in US except for tax on dividend. If you buy them in Singapore, Hong Kong, etc., etc. So you make it even tougher for an FII to justify. But the second thing is, we keep saying every day that our GST collections are up, our railway revenue is up, everything is good. Why do we need one more avenue right now to collect extra resources? I don't think it is needed, and I don't think they are doing it.
Okay. Talking about this year, when we started the year, almost everybody seemed to be saying that the first half will be tough, but the second half will be good. Do you agree with that, or is it too much of a consensus for the market?
There's too much preciseness, which is not needed. Look at it big picture. In the US, the US market has been negative 2 years in a row, very rarely. In the last 25, 27 years, only once. In 2000 and 2001. Supposedly in the last 100 years, it is negative only 4 times. That 2 consecutive years were negative. So if we look at last year, what was the issue of FII selling, which was in the first half something like $28 billion. It had to be for non-India reasons, because I don't think India did anything specifically bad in the first 6 months last year for us to have a 28 billion outflow. Because in general, foreigners invest. In India, they have only sold net in a calendar year 4 times in the last 20 odd years. And all of our bad years, 2008, 2011, 2018, you could say was India related maybe a little bit, and last year. So one reason would be US interest rates, US inflation, and that is out of the way. And plus minus 2-3 months, the US interest rates would have reached the current target, which is say 5 and 5.25 type. One will be on Feb 1. So in 2-3 months that would be over. The China problem is over. Actually the sad thing has been, which I never imagined, that to get to their rebalance in China, it seems that they are actually taking out money from India, because the flows right now are positive in all of China, Taiwan, Korea, all markets except India. I think that is a little bit of a rebalance, which I never imagined. But I don't think that rebalance that you take out of India to fund other markets, that I don't think is a very longer term thing. So if both those markets are okay, then our external thing is positive to flat, and then we can move on in life.
But sometimes people sell something because it has done well. Do you think that could be India's problem?
I don't agree with that, because last year in absolute the Indian market was flat. So what happened was that China did very badly. Now China did very badly not for random reasons that you don't precisely know. It's like saying two companies are going up and then suddenly after some time you realize that, oh my God, one company's valuation relative to other has gone up a lot, and therefore there will be a mean reversion. But if the second company has fallen because of very specific, some corporate governance issue, some very poor result kind of reason, then you can't say no, they should move in the same band. I think China issues were specifically hurting investors, and all of that cannot be forgotten just because now you'll play a mean reversion. But in the first round, it is happening like that people are playing the rebound. Plus minus a few months, the big new allocators are unlikely to put the same amount in China as they might have been doing before in proportion and as a percentage, as if whatever was happened in China was just a 1 year story. So I think it'll be okay in a few weeks plus minus.
If this is going to be a better year than the previous year, is it your expectation that we'll have double-digit returns? Because last year was flattish.
Yeah. So do big picture. So in every 6-7 years there's one bad year.
Yeah.
That one bad year is not bad only for that year. It takes away the returns of the previous year and mostly sometimes even the 1 year before that.
3 years.
So you get 4 years of returns in a 7-year cycle. So that means the years in which it is positive on average is more than the 13-14% 7-year average. So when it is up, it has to be up more. Now that part you might be right that might happen in the second half. Why? Because the US will be keeping these rates for some time. They say 8-9 months, whatever. So maybe by end of year the US rates will be cut, which also allows India to cut and all that. And if the world is actually relishing a rally, then all that will happen by end of the year, because a few months will be at these high rates which are not increasing anymore but are still quite high, the US rates. And therefore I think end of the year you might in one spurt get the last 5-7 extra percent to have your overall returns higher than 10% for sure, I think.
So the gains will come in the last quarter?
I'm saying if for the general year the market is flat to up a little and then you get something right at the end, that also is acceptable. All we don't like is a minus 10% kind of a year. Plus, we all accept that over time equity markets beat debt by a reasonable number, which is like 5 to 7% per annum, which is basically the equity risk premium, which means what the equity markets deliver relative to government 10-year type bond of that same market. That globally and in India on annualized basis is 5, 6, 7% per annum. So that normally leads us to be 13, 15, 14% type of return, which you can see we have done for the last 25 years, for the last 10 years, for the last 18 years. Why I say 18 years? Because Helios started 18 years ago, so I know exactly what the index has done. Broadly speaking, it is thus 13, 15%. So plus minus a little bit, it'll do the similar amount.
No, what you say is especially important this year because a lot of local investors have this quandary, because last year was flat for equities. This year they're saying they'll get 7-8% on fixed deposits. So
yeah, that is true.
Equities have to beat that 2 years running. Will they be able to beat that?
Over time they will beat. If they don't beat it in 1 year, then they will beat it with compound interest in the next year. So you look at 2000, 2001. 2002 was a particularly boring year, flattish kind of a year. It was not a negative year. But after that, from 3 to 7, you got everything back. That part is inviolable, that you will make 6-7% more than fixed income over time. Now, if it came every year, it would be too easy. So it can't happen every year as a clockwork. But it happens over time, and there is no reason to say that today India's situation relative to the world has not improved, whether you call it compared to China, compared to Europe, and in general compared to other markets. And therefore we will get our fair share of foreign flows. That, along with the fact that Indian flows are also good these days, and that there's nothing bad happening otherwise in terms of economy or this thing, yeah, you will make similar returns as you have made in the past.
The other decision a lot of local investors need to make is where do they put their money? Because last couple of years they have invested in some PMSs, mutual funds, but a whole lot of them have struggled to beat the Nifty. Should they just be buying index funds and paying peanuts? And
No, absolutely not. Please don't do that. So the thing
is it a problem? It is getting to be a problem to beat the index.
For 1 year, it has been a problem because the stocks that have gone up last year, we don't buy. Nobody buys Coal India and NTPC except the guy who bought them, but then he underperformed the previous 9 years. So the point is, some of these value type stocks, these are not even real value. These are just beaten up, forgotten, should not have been listed kind of stocks. So if they do well for some time, that doesn't really make that a viable strategy going forward. India is a growth market. See, value can work in many situations, but the main situation is that you should have the ability to take over assets, break up assets, go to court, change managements, force management, just unlocking value in some sense. All that is not possible here and nobody has the energy to do it. So we would stick with our broad thesis that the three big sectors in India are financials, consumer and technology, which is mostly the case everywhere. If you look at the Forbes billionaires list and say from where have these billionaires come, because that is the genuine long-term wealth creation in long-term, all come mostly from financials, tech and consumer.
Yet I believe that you have sold your IT stocks for the first time in life.
I have sold many stocks my life, but first time I've gone to near zero weight, which worked for the last 7-8 months, didn't work this month.
All gone? Infosys, TCS, everything?
All gone. Because, the thing is that I have 100 rupees. So I can put it here or there. I have not sold India. I have only sold one sector and bought
I'm not blaming you. I'm asking you. Because you've been an IT bull for the longest time. I have been all my life an IT bull, and that is what made me my performance in the 90s. But over time I realized that the IT guys have only a 2-month lead over me, if at all, in terms of what they can see. Because in 2000 I saw that they kept saying we are getting orders, and nothing happened. And now when you can see the very visible symbols that even Satya Nadella comes and says that when he said that I'm firing these 12,000 employees that are Sundar Pichai.
No, not Sundar Pichai, Satya Nadella said Microsoft, that we are seeing slowdown in customers. Just now, I think yesterday or day before. Then the cloud companies, the business software companies, Salesforce, then the cyber security companies, all of them are seeing slowdown. Only one group does not see slowdown, which is the Indian IT companies. And I don't believe it for now.
They are misleading investors?
No, they refuse to talk about the future. They'll say right now we are not seeing. Because right now you are getting orders based on the current US economy, which is actually doing well. The US Federal Reserve is trying to engineer a slowdown. Correct. Otherwise, currently of course the economy was doing well. That is why the inflation was high and the jobs opportunities were high, and therefore the employees were having more job opportunities, therefore they are acting tough and resigning or asking for higher. So this is a little bit ahead, if at all. But I don't think that they're going to massively outperform that. I will feel very bad if I don't have it. Suppose they do well, but they do plus minus similar to what my other stocks, then I'm comfortable not owning them right now. I don't feel that, oh my God, I will regret it so much later, that why I didn't go back. So I'll go back after 6-8 months. Right now, let me enjoy.
Did you ever feel regret about not owning some of these value names which did well this year? No. You did buy State Bank of India. State
Bank we bought in 2020 June. That was a good one, yeah. Others we haven't bought because those we would not even consider buying. I mean, in the sense I would never.
Which are those other than Coal India and NTPC from that?
These are the basic. Who will go to buy them? Not me.
Now, any of the Adani Group stocks?
We have Adani Port.
Only one? None of the others because the float is small?
No. Float for us is okay. They are quite big. It's just that they went up too fast before you could analyze them.
Okay. That's the reason?
That's one of the reasons.
Have you sold any of your financial holdings? Bajaj Finance?
Bajaj Finance, we made 70x, but we sold it.
Fully?
Yeah, and now we...
Oh.
We can be on the other side sometimes on these stocks, yeah.
Okay. What do you do these days with the short part of your portfolio, the ones which you don't like or you bet on the short side?
So this is one of them.
Bajaj Finance?
Leave it. There are many, but we do 2% in many stocks, in 10 or 10, 12 stocks, or 25, 30% or 40% is in shorts, in 10 to 15 stocks of approximately 2% each.
Okay.
So no one position can kill me, but collectively they work very well. Actually, my outperformance against the index is quite high on the short, because every year something or the other is doing quite badly. Now the short names, you're not supposed to talk so much in public.
This is hardly public, very small sliver of public. On this point that you just made, that nothing will kill you, I want to ask you, because a lot of people in this audience and generally begin to wonder what level of diversification they should have in the portfolio. Because a few PMSs have told them that they should have concentrated portfolios of 10 to 15 stocks, and that is the way or recipe for outperformance.
It's a recipe for disaster. I just taped a program with my own team called Dhan Ki Baat, which you can see, but basically proving literally in black and white that even Mr. Buffett's concentration has not worked in the last 25 years. Initially, some might have worked. So the thing is, what we did is we looked every year at his top 10 holdings, which he reports, 10 or 50, whatever are his top holdings, which are in his annual report, and seen their performance versus his own performance. And if he had 20 or 15 stocks which are concentrated, less than 2 or 3 of them even beat the index in any one period. So what that means is that his tail did better. The stocks that were not in the top 10 did better, because it is just simply too much of a random bet that if you are concentrated, so let us say one PMS is concentrated and they have 10 stocks, and then another PMS is concentrated and they have 10 stocks. So if there are 50 people like that who have concentrated on 10 stocks each, unless some stocks are common, that means this group has collectively bet on 500 stocks. Let us say some stocks are common, so that means they are betting on 200-300 stocks. So how can they all do well? So what will happen is that the fund manager who does well will tell you his stories, and the fund manager who does badly will disappear and not be a fund manager. So this is no formula, this is a lottery. It's like I say that if you win a lottery, nobody comes and asks you, can you tell us how you chose the number? And then you'll say, I chose my birthday, and then I added my anniversary, and then I divided by 3. So everybody will say, oh, good idea, we'll also do the same. It's a lottery, and lottery is not a strategy.
What's the ideal number? I mean, what do you go with? 25, 30
we
stocks?
Go with 30 names.
30
in
stocks.
which we go 10 big names and 20 medium cap, whatever, mid cap kind of stocks.
So,
or new names. New means they could be large caps, but they were in trouble and are coming out. For example, if you buy Indian hotels after COVID, now you can't make it a 5-7% position because the hotel is closed. There is no vaccine. There is no idea whether India will get a vaccine. But you still feel like you're buying it for, it's a survivor, it's part of Tata, it's not leverage, whatever. You can't buy 5-7%. But that portfolio of 20 stocks, all the multi-baggers come without your knowing that these will be, but you get a slightly higher proportion than others or the market, and that is how it has been. So I have got, other than some specialty chemical guys, literally every multi-bagger of this country, without knowing that it will be a multi-bagger.
But they all
by buying 2%. Yeah,
2%.
Whether it's Bajaj Finance, HDFC Bank, Kotak Bank, in the new life, Varun Beverages, or kuch bhi, but 2% se hota hai kaam. And then they go up whatever number of times.
What do you do when 2 becomes 10%?
No, we don't let it go to 10 because we are a fund. So new investors are coming in all the time. So 2 also doesn't mean 2, because if a stock is doing well, you can always add a little because now it's your stock. If 2 becomes 2.5 by its performance and you think everything is doing well, okay, then you add it. But day one, I'm not buying 4 of anything. That's the idea. But we won't let it go beyond 4, 5.
Okay. What do you do with some of the old stars that have always done well for you but have disappointed you for 2-3 years? Do you let them go? I'm asking for something like HDFC Bank.
No, it's still our number 1 holding, and it will not be, it will be a star, I think, starting maybe this year.
Have you already seen signs of a pickup again? I mean,
No. You see, it's a technical issue also.
Yeah.
So the thing is that, of course, it's doing well. It's growing 18-19%, and it is very, very cheap. It's 1/3 the valuation of a Bajaj Finance. But the thing is, it's a technical issue. Once HDFC Bank and HDFC merge, we expect, based on these things that people put out, that $5 billion might be the selling just from index funds, because currently HDFC Bank is not in the index and HDFC in the index. When they combine, the whole thing will be in the index. Currently, 20% of HDFC Bank is owned by HDFC, which is counted as a foreigner owning it.
Okay.
Because HDFC is viewed as a foreign company, but it's not literally owned by FIIs. So that capacity will be released, you can say. So there are technical also in the case, because there's an overhang in the past 2 years that is not in the index. If it is removed from the index, that created extra this thing. I think it is very good. Let's see.
In any of your smaller holdings, did you consider including any of these newly listed digital stocks in 2022 after they crashed 50%?
Yes, we have bought 2 of them.
Which ones?
We bought Zomato and Paytm. Paytm though we bought less than 1 month ago.
But not Nykaa?
No.
Why?
Because Nykaa's business looks more easily doable by others.
Fewer moats.
Yeah, because in the sense that business, I think, can be done by many more and will be done by many more. Whereas Zomato's business, you can't easily replicate, and Paytm also you can't replicate now. And both of them are not making losses, and both of them are $1 billion cash, and they are down. Paytm we bought basically effectively 75% down, but Zomato we bought at this price only 51, and it went up to 70 and has gone back to 51. Let's hope that we go back now because of resignations of their some founders. Let's hope that is. But right now we believe in both, that they are worthy of that 2.5% second group bet.
You think it's a possibility they'll go on to become multi-baggers?
Yeah, I think they will become, or at least they will give me first round 30-50%. Then we'll see. Paytm in Davos has in an interview announced that they will break even pre-ESOP ahead of their announcement, of their guidance, which was September. So I think it'll happen in March, because otherwise if it's going to happen in July, then what's the big deal? It's going to happen just like 2-3 months before. So let's see if they do it now.
What do you buy in consumer? You said IT, finance, consumer.
Yeah.
What do you like in consumer? What do you own?
Consumer, we own these low ticket consumer. That means the guy who can buy, go to the mall and QSR, Varun Beverage, we own Lemon Tree, we own Indian Hotels. Basically the low ticket middle class. And I am bullish, I hope it works out, that in this budget, if they increase the limit for income tax for the public to whatever, 3.5, 4, 5 lakhs, then they'll all go and eat McDonald's burgers.
Okay.
Or they can have a drink also, Varun Beverage or something they can have. Or even their drink.
No alcoholic beverage.
We don't have currently, we don't have.
Why Sin stocks?
No.
Nothing
Actually, I made a presentation that good people should only buy Sin stocks. Because if good people don't buy Sin stocks, then bad people will buy Sin stocks. And since Sin stocks are generally good, that will make bad people stronger. It is better for good people to buy Sin stocks, take the profit, and then do whatever charity or whatever donation they want to do. They do good things with it, yeah.
What is the big risk, Samir, going into 2000? We've spoken about good things, what may happen, why markets will go up. What is the one thing which makes you worry at night?
So I still think that the US guys are getting a little bit excited, because although the inflation is going down, the target is 2%, and not just 6 has become 5.5. So that disappointment can happen. By the way, from tonight the results are coming of Microsoft and all. So we'll see whether, because all those stocks are up, like this year, 20%. Not Microsoft, but most of the other beaten up names are up 20% type number. Okay? Not the big ones, but anything which was beaten up, PayPal and I own the Spotify, all those are up 20-20%. That's a bit too much, I think, suddenly in like 2 weeks. So if the US doesn't settle, then the problem is Indian interest rates also have to be high. Otherwise our rupee is under attack. So all these things are there. Nothing is straightforward, but in the end, we have seen everything. I have seen everything from plague, which you did not remember, in 94. We had a plague also. Then we had US sanctions, nuclear tests, then we had whatever. One government of Mr. Vajpayee lasting 14 days or something. Then we had Kargil, then we had whatever, then we had lockdown, then we had demon. Or some boom, you make good money. So, it's okay.
It'll work out.
It'll work out in the end. That is what the equity guys are, bullish guys and bulls and optimists. It'll work out in the end. India has got relative advantage that we did not have before.
True.
And I think India's relative advantage versus China is quite serious now. Because you tell me, if people have just lost money, that means, say, the corporates, I'm saying, a McDonald's or whatever, putting money in Russia and then being asked to mark it down to zero and sell. There is a non-trivial probability that something happens in Taiwan. And even if it doesn't happen, China will never say that I'm not going to do it. They can't ever say that black and white, right? So there is some 10% probability. Now, what does a new guy do? A new FDI guy or who wants a supply chain, he has to little bit diversify away from China. And India is one very reasonable, fair alternative. And we need some of that also. We are not saying make us China. Give us that overflow or that shift in some this thing to us. That's a big advantage, I think.
That will be enough. Samir, always great talking to you.
Thank you
so much for your time. Thank you. And now for our next session, which Abha will come.
Thank you so much. In our next session, we look at India Inc. expectations.